Morning, everybody. We are back for another episode of Talking Ball. It's the 31st of May. I'm Joe, joined by Steve. Good morning, Steve.
Good morning, mate.
How are you?
Yeah, good, thank you.
Good, good. Okay, so it's month end, so promises to be a bit of a choppy one today. Plenty of headlines to get through as well, so let's get into those straight away before moving on to some charts. As always, if there's any markets that you guys are looking at and want us to check out for you and provide an alternative opinion, please feel free to post them up and we'll do our best to cover as many as we can. So first up, weak Eurozone data yesterday. The Eurozone Industrial Sentiment Index dipped to minus 5.2 for May from a previous number of minus 2.8, while the Services Sector Index also retreated to 7 from 9.9. Both figures well below market expectations. The overall Business and Consumer Survey Index retreated to 96.5 from 99 and also below expectations. We saw some mixed data in the US on the consumer confidence side of things. The data or the number retreated to 102.3 for May from 107.3 in April, although there was a significant upward revision to the April reading from 101.3, and the May figures were above expectations of 99. Markets still expect further Fed rate hikes. The Cleveland Fed President Mester stated that there was no compelling case to wait on further rate hikes, while the Richmond head Barkin stated that there was evidence of a slowing economy, but businesses were still looking to raise prices. The Fed funds futures indicated a 65% chance that there'll be a rate hike at the June meeting. Overnight, we've seen some verbal intervention from Japan, and that stirred volatility. The yen jumped after Tuesday's European Open with the announcement of an emergency meeting by Japanese authorities. Japanese top currency diplomats stated that officials are watching forex moves closely, and it was important for currencies to move stably, reflecting economic fundamentals. He did, however, add that he was not focusing on any specific forex levels. The dollar retreated ever so slightly yesterday from a 9-week high, but it's back on the front foot again today. We'll take a look at that chart shortly. We had some Chinese data overnight. The latest Chinese PMI data was weaker than expected, with the manufacturing index edging lower to 48.8 from 49.2, still in that contraction territory, and the data maintained reservations surrounding the Chinese outlook. Later today, we've got US jobs or JOLTS data. The jobs opening data will be released later. Markets will consider this an important evidence on whether the labour market is easing. And we've also got a US House vote due today as well. The US House of Representatives will hold a vote on the debt ceiling deal during today's session. Markets assume that there'll be enough votes to pass the deal, as there often is. And finally, it is the month end, and therefore there could be some choppy conditions today, with month-end position adjustments being a significant element. Okay, a couple of requests already coming in. We're going to be checking out Golden DAX in a moment. Sanadine, I don't know if there's anything else at the moment, but feel free to post them up. Steve's going to kick us off with a look at cryptos.
Lovely, thanks, Joe. Yeah, we'll just take a look, start with the daily chart, really. We've got a potential reversal formation on the longer term chart, but it's still got a long way to go. 31,000 is the level to watch, really, in terms of resistance for that. On the daily chart, though, we are seeing a little bit of a topping formation. Potentially, it's a head and shoulders formation. We look like we've retested that next neckline. We've extended through it, as you can see, from this push higher up towards 28,500, and we stalled, reversed, and over the last couple of days have moved lower. And next level of support really for us is around just below the 26,000 level. That's quite key. Now, a breakdown of this head and shoulders formation after this retest potentially leads to a measured move target of 22,600, and then after that, we've got this upward trending support line today that comes in at the 161.8 extension level of that measured move, and that's just around about 20,000. So that's the next key level of support after that. Ethereum, pretty much the same type of price action, although the sort of like a break through the neckline has been extended higher. That's topped out at 1927, and we've seen a little bit of a sideways day yesterday, a little bit of indecision yesterday, but overnight we've seen prices move lower here as well. Next real level of support for me would be around about that 1730 to 1740 level. That's quite key on the downside. Resistance now from that top at around about 1930. Above that, you're probably looking around just about above the $2,000 level. XRP seems to be extending a little bit higher and more aggressively. You can see we've got this really awkward looking head and shoulders formation that we attempted to draw, but probably the most relevant formation that sticks out and looks pretty decent at the moment is this inverse head and shoulders formation, where we've got the push down to here, a reversal to a neckline, head, neckline, right shoulder, and extension higher. That gives us we can take the Fibonacci extension tool to give us a nice measured move target, and that's all the way up around about the 55-cent level. So well on its way there. That break over the last few days, really since Sunday, really has extended higher quite aggressively, and looks pretty good. XRP looking decent for the cryptos. Let's take a look at commodities. Sanadine asking for gold. Let's take a little look at that. That had a bit of an interesting move yesterday. Went against me on my gun-to-head trade idea. We managed to post a low at 1932 on the daily chart before the reversal higher. So we were caught a little bit short there and got stopped out. So good support coming in around about that level. We did say it was a bit of a level yesterday. There we go, 1935. We could call it. That's probably a more structured one, so we did break through it yesterday, but didn't stay down there too long. We've got the moving average crossover divergence looking turning a little bit more towards the positive area. So a nice reaction overall on that formation and that chart. Now we can really sort of like look at the price action that's forming here. We had this spike higher Monday night. Markets closed at whatever time they closed because it was bank holiday. Markets closed at 9 o'clock and they opened about I think it was 11 o'clock or something. A bit of a gap up on the chart, which was quickly negated on this chart. This is our Oanda chart, and we seem to be sort of making a little bit of headway back towards that level at 1970. Currently trading at 1958. And just pulled back from 1965. So yeah, it's a little bit more positive than it did look yesterday when I was thinking we're going to continue with this break lower. Get rid of that. No point in hanging on to that. Now support for us coming in around about 1950. That's a bit of a psychological level. Also, we've got a hourly Ichimoku cloud around here. We've reversed over the last couple of hours. This potentially just gives us an opportunity to buy into this rally, in my eyes, as dollar pairs back slightly from the highs of yesterday, but it's still looking ominous on the dollar side of things. So I don't know. I think I'd probably sit on the fence with this one today. It's a little bit, well, you've got the resistance up at 1970, then above that we've got 1985, then 2000. Support, as I say, coming in at 1950, then around about that 1935 level. This feels a bit like no man's land, so I'd steer clear if you know, in terms of trying to put on a position. Otherwise you've got to go down to like more, you know, shorter term time frames, the sort of 15-minute or the 30-minute, to try and look for it. Even there it still feels a little bit like you're clutching at straws to get a position on. 5-minute chart maybe offering a little bit of support on the upside after banging into the cloud and posting a doji candle, but I'd just leave it alone. I think gold at the moment, wait for that retest of them support and resistance levels. Taking a look at crude oil, we can see a breakdown in crude oil over the last 24-48 hours. Price action reacted higher from the 15th of May towards the 24th, topped out at 74.67 on the WTI crude oil. Then we got that bearish engulfing candle. We had a bit more of a positive day Friday, but that's topped out. Monday's price action stalling at that 73.57 level, and quite a big reversal yesterday. You can see we took out that interim support level, the upward trending support that we saw. We've actually taken out the swing low from the 15th of May as well, and trading just below that at the moment, 69.22. So that does open up the downside for me. So this will be quite an interesting one to take a short position in. It is Wednesday. We've got all inventories later, so it could be quite a volatile day for that. Let's take a look at well, both the hourly and the 4-hour chart well below, broken down well below that cloud level. So it would be nice to, I suppose, resistance from that perspective. You'd be looking around about the $70.60 level, and maybe up towards $71 as the retest of this breakdown. So ideally selling into rallies there. If you're looking at a bit more of an aggressive input, then selling a break of the support around a 69 could be interesting. So again, that sort of sets itself up for maybe a quick gun-to-head trade idea. You can, if we're trading around there when it comes to that time around about 8:30 when we put them on, then we could look to be getting in there with a very tight stop, and really wouldn't look for much more below that break line. It opens up, there's a little bit of space now opening up if we do manage to break that support level there. Natural gas under a little bit of pressure again, since we topped out at that. Oh, this is a messy looking chart. Let's just try and get down to the candles. The evening doji star formation, which we talked about last week, breaking down from there really nicely indeed. That's played out lovely. And we did find a little bit of support in front of the previous swing low. So we stalled around about the 227 level, reversed higher, trading at 231.70 at the moment. Still on a bearish note, still this impulsive short-term move downwards, driving price action. But the fact we stalled in front of support at 223.60 is a little bit positive. You can see the 4-hour is well below the cloud, and the hourly obviously will be down below there as well. So in that short-term trend downwards. On natural gas also, let's take a look at the dollar index and all the FX before we dive into anything else. I'll come back to that very shortly.
Nice one. Yeah, so plenty of requests coming in for FX, which is great. Thank you very much for participating, guys. So let's start off with the dollar index to see how things are shaping up on this side of things. So we can see that yesterday there was a little bit of indecision. We actually posted a bearish engulfing, actually a bearish outside day candle yesterday. But we're coming roaring back today, up by 0.4% as things stand. So there is some resistance here, some minor resistance at 104.20. Price has stalled into that level, but now pushing through it quite aggressively. So obviously impacted by the information that we've had overnight, the fact that we're likely to get a rate hike. We've also seen this intervention from Japan and some disappointing Chinese data, all of which is combined together to push the dollar higher. In the short term, we're approaching a 78.6% fib level. That comes in at 104.80. So very much on the front foot. And still looking pretty strong indeed. And of course, having an impact across the board on other currencies. We can see here on Euro US dollar, following the break of the bullish channel, prices have continued to move lower. There's not really been any respite there at all for the euro, as the dollar has completely dominated it. We had a 61.8% fib level at 107.37. That failed to really do anything, to be totally honest. Yesterday, we made a bit of an attempt at trying to reverse this, but it's all bets off today as the price action is moving lower, down by 0.5% as things stand, and one of the worst performing currencies on my list this morning. In terms of the next level of support, we've got one down at 106.40. That's a 78.6% fib level. So looking pretty negative for the time being, and expecting to see lower prices in the short term here. Taking a look at some of the other majors, let's look at sterling versus the US dollar. This is holding up a bit better, actually. So sterling looking quite decent at the moment compared to some of the other currencies. 3 days of strength. Yesterday was a pretty good day. We are reversing some of those initial gains that we made yesterday, but it's still very early in the session, potentially forming a bit of a top pattern. I think if we take out the lows that we posted last Thursday, or last Friday, in fact, at 123.10, then that's likely to trigger further selling, and will likely mean that the dollar is continuing to dominate in the FX space. Let's take a look at some of these commodity currencies. There's been a request for New Zealand dollar, US dollar, but I'll take a look at Aussie first. We can see here that prices were trading in a bit of a range, the lower end of the range coming in at 65.67. We then had this big band of support, which we expected to do a bit of a job, but in fact it didn't. Prices broke through that level there on Thursday last week, and what we've seen in the last few days is just simply a retest of that newly formed resistance level, and prices have continued to move lower. Big negative move today, taking out those lows that we posted on Friday, looking as though it is going to continue moving lower. We may have some support on offer down here at this 78.6% fib level, but it looks pretty negative here, and the dollar is giving this a bit of a kicking at the minute. Let's take a look at New Zealand dollar, US dollar. Similar situation, was trading in a corrective channel, broken down through multiple support levels, now taking out a 50% fib level today, and looks as though it is heading lower. So the next level down is a 61.8% fib level at 59.03. So these commodity currencies are taking a bit of a whack at the moment. Let's have a look at these other requests then. So start from the top, we're going to take a look at Euro Yen. Obviously, overnight volatility from these yen pairs due to this verbal intervention that we've seen. So Euro Yen, all in all, looking pretty bullish. If we scroll back to the left-hand side, we can see that price action is steadily moving higher and has been for a number of months. But if we look at price action in the most recent sessions, we broke out of this kind of continuation pattern here, but prices have come up just shy of this previous swing high that we posted in early May, and been a pretty decent reversal over the last few sessions. Have we seen a break of short-term trend here? Let's have a quick look. We're coming very close to it, so you could argue we're on a trend support line as it stands at the minute, depending on where you draw that from. You could maybe argue that we're in the process of trying to break that. So we've got 3 touch points here, pretty much on that trend line at the moment. Below that, we've got support levels at 148.40 and down here at 146.28. All in all, we have to consider the long-term trend, and that is still pretty positive, but maybe a few warning signs here, given that we've seen this reversal. If we get a break of this short-term trend line, then that may trigger further losses in the short term. But all in all, it's still on the bullish side for now. Let's take a look at sterling yen, see what's happening there. Similar situation, overall trend pretty bullish, trading in a short-term uptrend. We had a bit of a continuation pattern here. We broke out through that on the 17th of May. Prices then pushed through these previous highs from October last year, and we're still above that level. So any pullback here, despite the bit of indecision we've seen over the last couple of days, may ultimately prove to be an opportunity to buy. But of course, we don't know what's going to happen with this chat of intervention and whether or not they'll follow through or mention any particular price levels. So a pullback into around 172.32 for me may be a good area to consider a fresh long opportunity, targeting a move up to resistance around 174.88. Okay, New Zealand dollar versus the Japanese yen. My chart is a bit messy here. There were a couple of ranges that we were highlighting here. It looks as though it's probably the worst performing of the currencies on my list today, that and Aussie yen. So big range here. Tried to get towards the top end of that, but failed. But the last few sessions have been very negative indeed. So we're smashing through all sorts of support levels here. So looks as though it is potentially set to move to the lower end of this range. We do have some short-term support on offer around here, which is his previous swing low from the 12th of May. That comes in at 83.69. Initially, we've seen a bit of a bounce off of that level, so it'll be interesting to see how that plays out for the rest of the session. Obviously, we've already seen a pretty big move, and that doesn't mean that it won't continue to move lower, but it's obviously a pretty outsized move already to start the day. So maybe that level might provide an opportunity for any scalpers or short-term intraday traders to maybe pick some up there into that support. And if we just throw that back to the left-hand side as well, we can see obviously there's a number of areas here that acted as resistance previously. We then saw prices push through that and now act as support. So it might be a reasonable level to consider doing something, but obviously it's been a pretty rough ride over the last few sessions on that. Okay, let's take a look at sterling versus New Zealand dollar, see what's happening there. So sterling, again, displaying its strength, big breakout to the upside here through these previous highs around 2.0318, and also a 61.8% fib level at 20374. We've got this blue line here, which also goes back to the 3rd of February, all of which have been taken out. So that's very positive. We did get a break of the channel here, but obviously prices have come roaring back and that's looking pretty solid indeed. So any pullbacks potentially to these previous highs here from February, or even to these previous highs here that we posted in late April, may provide opportunities to buy. But all in all, sterling looking pretty strong against the New Zealand dollar at the moment. Have we got anything else? Yeah, so we took a look at Aussie dollar, but Andrew, hopefully you saw that. I will take another quick look at this. So 0.5% down already, or 0.57% down, broken down through multiple support zones here between 65.67 to 65.20, and we are making fresh lows on the session, so looking pretty negative. The next level to target on the downside is down here at 78.6% fib, and also we've got a support in here as well at 63.72. So looking pretty negative there and set for lower prices, certainly while this dollar strength continues. So hopefully that covers most of what everybody wanted to see on the FX space. Steve, I'll hand it over to you and you can look at some indices.
Okay, mate, thanks for that. I'm going to take a look at the DAX. That was the main one requested, and start with basically what's going on the weekly chart. We've stalled at resistance up around about that 16,300 level, just above there, 16,335, and reversed sharply lower last week, sort of like finishing, almost giving up the gains, all the gains of the week before. Now this week we've extended lower even further, and we're now challenged that previous resistance, which now becomes support around about the 15,700 level, just trading. We just bounced actually from it's making a low just below the 15,730. I know on an intraday basis our analysts are looking to well, they've already triggered a dip buy there, but still under a bit of pressure. Daily chart, we can see the pressure building here, and having a bit of a, basically if we take it all the way back to here, this is where we're looking at that supportive area. Quite a wide channel, and yeah, looking like ready to retest if we manage to. It's really sort of going from Thursday and Friday's low last week, 15,722, but the 15,000 also seeing it down to 15,690. Really need a clear break and a close below there to really get things going on the downside, and there could be a potential for a sharp move lower if that does continue. The pressure does build. I think if we look at all the indices, we are finding we're running into a little bit of support on the 4-hour chart. We're below the cloud, obviously short-term bearish trend, and the hourly chart. So that always for me looks pretty good. You can see even on the hourly chart played out a really nice double top formation after breaking through a 15,925 neckline. But also the daily chart posting a bit of a bullish hammer at the moment. So still got 35 minutes left to go of that hour. So this could turn into quite a nice reversal on that chart if posting a higher low just in front of that quite important support level. So we'll see how that plays out. Looking quite good for our intraday trade idea on there, as I say. Quick look, take a look at FTSE. That's broken down more aggressively, and we have taken out, obviously, over the last week, we've taken out that support level at 7690. Yesterday, or let's go back to last Friday, we did have a rally higher, but we've given up all those gains yesterday and really under pressure, bearing down on support. Probably a bit further down around about that 7300 level. So really under pressure at the moment, FTSE breaking lower. Going across the pond, we've got a little bit of reversal going on in the Dow. That topped out around about the 33,250 area, and yesterday we took out, or overnight we've taken out yesterday's low at 32869, and just bounced from there, but still looking a little bit ominous on the indices in the US also. The Nasdaq has been the one real bright spark amongst them all, but even yesterday that doesn't look so clever. We're looking at a potential. I mean, it's like almost a doji candle, but you could also see the likeness to a shooting star candle there. Now, support today would come in from yesterday's low, 14,309. We've already breached that this morning, but didn't stay below it for too long. and really need to get a close below there on a daily basis to signify a potential for a reversal, because the 4-hour chart still can see prices pull back to, about 600 points before we even start to think about getting bearish on the Nasdaq. So, but as you can see, this main 4-hour candle from last Friday's price action, where we really broke aggressively higher, broke through that 14,000 resistance up to 14,262. Huge move in a 4-hour candle for the Nasdaq, but we could give up those gains just as quickly if we manage to get some decent bearish momentum or downside momentum built into there. S&P's already trying very hard to break through that support. The support today was around about 4195, already broken through it, got down to 4187, but bounced from there. Again, if we start to see a close below that 4195 on a 4-hour candle even, it starts to sort of like look a little bit toppy from an intraday perspective. On the daily chart, again, looks at this bearish outside candle from yesterday, looks pretty ominous for more medium-term price action. So, yeah, looking bearish overall. Even the Nasdaq wobbling at the moment. Actually, getting short at current levels doesn't look like the best idea. But if we do get a little bit of a pullback higher, and you are a little bit bearish towards these indices, then that might provide a good risk-reward opportunity.
Nice, Steve. Thank you very much. Okay, let's take a look at the guns of the head trades then. So this is a little challenge that Steve and I participate in every trading day. A couple of rules that we must follow. So we've got a live account that we are running. We started off with £2,000 at the start of the year. And the rules of the game are we must have stops and targets on the trade ideas that we pick. We come up with them pretty much on the spot. So not a lot of thought or preparation got into them. The risk reward ratios on these trade ideas must be at least 2 to 1 or better. The ideas are closed out at 9 p.m. UK time unless the stop or the target is reached prior to that. And for risk management purposes, we risk 1% of capital on a per trade basis. So yesterday we placed a couple of trades and we didn't get very far with them, did we, Steve? We were stopped out pretty
No,
quickly on both of them
yeah,
yesterday. I
it
don't know
wasn't
if you
good at
can
all.
bring that up on the screen.
Yeah,
I
let me
wonder
take a look here.
live. I don't think they were published
Oh,
yesterday.
did we not post them?
No.
So,
So maybe you can just show them on the account.
yeah, looking at our transaction history. Yeah, I was going short of gold at 1935. Stop was at 1947. That got triggered within a few hours. Lost £18.19, just under 1%. Couldn't get 1% risk on due to the sort of size of the accounts being quite small. And Joe was short, getting short of Aussie yen. That was stopped out at 91.84.
So just bring
Taking
that
the
up on
arm
the
medicine.
screen.
Yeah,
Gutted.
that's a bit naughty, isn't it?
Yeah,
Eh?
stopped out there. Well, it's a pretty chunky move through the stop, to be fair, but yeah, not
Yeah,
ideal.
but it just shows you sort of like, I mean, yeah, the ideal stop level is a little bit higher than that, and we know
Yeah,
that. So
obviously, yeah.
but we're trying to, look at these on an intraday basis. So you tend to take a little bit more risk on an intraday basis because there's the markets can move. There's a lot, more potential for a little bit of a noise influence where you get like one statement, one little break in trend somewhere, and it has that like knock-on effect. Yeah, I mean, ideally the stop should have been above 92, but then the risk reward, we still have to have a 2 to 1 risk reward, and potentially you would probably hit it if you carry the trade over until today. But yeah, that's very frustrating when you see that, especially you're getting stopped out on a candle which looks so bearish.
Yeah, I mean, our standard approach to markets is that we wait for the market to come to us, in that we place limit orders or buy stops or sell stops on trade ideas. So we're waiting for a defined level in the market. But obviously, when we're doing these videos each day, we have to do them right now. So we've effectively got to come up with these ideas on the spot, not always at ideal levels, and therefore we do have to try and be a bit cuter with our stops and targets. But that's the way the game goes. So we get to reload the gun and have another go today. Is there anything that took your fancy, Steve, on the look through the markets today?
Yeah, I suppose the one that I know we're going to get some volatility out of due to the oil inventories out later is WTI crude oil, West Texas crude oil. We have had this breakdown through support, so potentially we could be forming a bit of a bearish flag as well. Now we've stalled at these support levels. I can just draw a little bit of a flag on there, bearish flag, looking to break lower. Again, you would wait for support normally to get into this, or at least wait until maybe you get a pullback towards that 69.80 area to get short. So little bit of a bounce higher at the moment, so I'm selling into a little bit of short-term strength and trying to get this trade on. Let's see if we can, what we can do with this. We want to make sure we get 1% risk on. That's risking £19.30. That's in our account. We've got £1,930, so that's 1% risk. The stop on this around about, I mean, I want to be a little bit cuter with the stop, like we say. It's got 69.80 on there, Joe. That's quite tight, really, even for me. Where are we trading? 69.42. Let's take a, if we took a 60-cent stop, we're just above that 02 level. We can get a 2-to-1 risk reward out of here. Let's be a bit more aggressive with the downside. I don't mind trying to get some sort of measure move target somewhere down there. I mean, it's quite punchy, isn't it? Very punchy indeed.
So that's 7.5 to 1.
Yeah. I mean, why not? Let's do it. Let's move the stop up.
You got to change
Yeah.
that.
Yeah. How's that? Is that risking 1%?
7 to 1. Yeah.
Let's get short of that. Why not? Let's get short. So we are oh, it did sort of like, yeah, 70.04. Yeah, I'll go with that. Stop level around about a 70.04 level. I'll tidy this up afterwards and targeting a move to 65.42.5.
Okay. Good luck.
I don't mind. You know, let's go for it.
Definitely. Right, so Steve, get that published up shortly. I'm taking a look. I'm going quite boring today, Steve. Looking at Euro Swiss. This is the daily chart that we have here. So we can see here prices have been trading in a bit of a range for a period of time. In recent weeks, it looks as though we've been forming some sort of ending wedge formation, and the buyers have stepped in just ahead of a 61.8% fib level and also kind of the lower end of this range. Yesterday, a big bullish candle and trying to push higher again today. Looking at it from an intraday basis, it looks pretty good as well, though this is eating into my risk reward. So I would like to buy at market, Steve, with a stop at 97.06.
Okay.
I'm going to have to improve my target now because it's moved a bit higher. So I'm going to go with a target of 97.65.
Just over 2-to-1.
Yeah.
Right.
And I'll get that published up as well.
Yeah.
Has that got him?
Yeah. Looks. Oh no. What's it doing here? No, that's only put a fraction of the trade on, hasn't it? It's only risking £9.58.
Is that the best we could do then, is it?
No, I think we could do better than that.
All right. Should have needed to risk 0.49 on that one then.
Yeah, yeah. So again, stop at 97.06, 97.65. Buy at market. Let's do that again.
Okay.
There we go. So overall, we are risking that 1%. A little bit
Beautiful.
of a fat finger there. So
one of the risks of trading, Steve.
Yeah, exactly.
Showing it all here.
Even the best do it. Yeah.
Yeah. Okay, we'll get those published up. Let's take a look at the data that's going to be out today. So German consumer prices due out at 1 o'clock. That's the latest read on inflation in Europe's largest economy. Then at 3 o'clock, we've got the US JOLTS job openings data. And at 7 o'clock this evening, we've got the Fed beige book. So a few bits out there to round off the month. Obviously, a few other bits in play as well at the minute. For the rest of the week, tomorrow we've got US ISM Manufacturing Index, and on Friday we've got the US Employment Report or the non-farm payroll. So exciting into the week, as always, with that number. Okay, bit of a longer one today with all the headlines and the requests that we come in, but that's all good. Thank you everybody for watching. I hope it was useful, and we will see everybody tomorrow.
Cheers all.
Bye-bye.